Hello, everybody. Good morning, good evening, wherever you are. Welcome to yet another uh, Beyond Rules and Rules session with Team Sky. What a week last week. Complete carnage, mayhem in small and mid caps, with the mid cap index falling as much as 7% in the week, while Nifty obviously fell only 2%, but it just shows the kind of breadth or the lack of it in the market. It just shows the kind of panic the investors got into. And the worst part is this has come without any reason. The the kind of screen I saw during the week actually reminded me of the times when I was in Ambit in 2007, and I was in my hometown for Diwali, and the market was falling on a daily basis like it did the last week. It reminded me of the ILFS time when there was a liquidity crunch because the ILFS event. It reminded me of the UTI scam time when I was going to my father's office. And but all the three cases, the panic was driven by certain event. The difference this time is it is not with the reason or an event, and it just shows the lack of depth, or you can say overvaluation, which is driving the mid and small cap. That there are no buyers even in steep fall. The index is down 7%, which means that most of the mid caps are and the small caps are down more than 10%. And it's not great volume. This sell off is not driven by FIs. In fact, whatever FIs have sold in last 4 months is predominantly in the top 100. I would say 70% of their selling has happened in top 100 stocks. And the equivalent selling which FIs have done has been bought in by the DI. So institutional level there has not been any outflow of money. Whatever outflow or the impact of the outflow has happened with the non-institutional level, which might be because of the leverage, because the leverage data is very stagnant. We did some analysis with my alternate team, and let me share some data with you. December 23, the value of the total futures OI in the market was rupees 3 lakh crore. By the time we reached September end, the correction started in October, we had reached 450 lakh crore. We had seen a little 10% correction in the market between October to December. Yet the OI has increased to 470 lakh crore, which means that people have added positions on the FNO side. So, so you will say that, or rather anyone will say that for every buyer there is a seller, right? It's not exactly the same because the seller might be an arbitrager who is equally long in the cash pool, or might be a delta hedger because of some options. While typically the long is done by those who are long buyers, which means the buyers are actually losing money, while the sellers are may or may not make a equivalent money. So, so what it means is that for every 5% correction, the system has to give a hard M2M of 20 to 25,000 crores. That's a huge sum of money. Hence, what happens is when a fall happens beyond the point, the leverage comes down. So either you have to cut your positions, as we say, market mein mal putna, or your financial will not able to give you more position to average. Last week, when the Mayhem started, for whatever comments came from one of the large CIOs over the weekend, we spoke to few NBFCs, and what we realized is that they have stopped giving new positions, be it broker or an NBFC. And even the old positions, barring a few select clients, they are making them trim the position, which means the the unwinding has just started. It's a good news that the unwinding has started, but it's equally bad because it can have a follow up this week. In terms of mutual funds, I think broadly from what I read, roughly 6 lakh crores is invested in mid and small caps. I'm not including flexi cap here. And while the data is not available, but I'm sure we would have seen some redemption looking at the way the fall has been. I just hope that the redemption is not very big from here because that's needed because liquidity is going to be a challenge for the small and mid cap. Sorry, I don't want to create panic, but it's a point of concern for the fall which happened. Now, let me give you some SIP related. In spite of the fall, those who invested uh, an SIP of equal sum from bottom of March 20, where we made a bottom of 7,500 on Nifty, we are around 3x from there. If you have invested equal sum of money disciplined wise every month, if you would have done in large cap, your returns would be somewhere 17-18% IRR. In a mid cap, it would be 23-24, similar in flexi, and 27-28% in small cap. Which means that in the long run, even after the correction, if you are disciplined, you make a lot of money. But the same number doesn't look good if you have just started a year back or 2 years back. Hence, people who are coming here into the SIP book or the investment for a long term may see some M2M losses in the short term, but you will make money. While if you have just come for some quick bucks, then you are in a panic mode and that money may go out of the market. So it depends at this point of time that where does the demand supply settle. It seems that the supply is more. But the supply is there only in mid and small caps. Large caps have able to withstand it. Yes, Nifty also down 2% last week, which is not a small number. But if you look at it, if Nifty is still above the 52-week lows. It just gave up some of the bounce it saw earlier in the month. Uh, Broadly, Nifty is down 5%, slightly more than 5% from post the October fall, which kind of highlights the fact that large caps doesn't see a follow up after a big fall. Remember, October 24, we saw Nifty going down by 7%. So what it gives the confidence is the fact that large caps finds a place to hold after a steep correction of 10% or so, even in bad picture. There is no fundamental news which makes me worry that the derating or the negative re-rating of India is going to happen. It is to do with the demand supply gap which has happened because the money has flown in with very high expectations and the market has not delivered that be it on earnings or on the prices. One question which came common during our interactions across has been what and how will this reverse? My answer to that is over the last 25 years of my experience, the biggest reason of reversal, if any, is because of just give me one second. Yeah, sorry. Is because of events, and this has happened without a event. So market will find an equilibrium only when the new money comes in. In terms of large cap, the valuation range over the last 6 years have been 90 to 26x TTM. We are now at 21x TTM. So the downside will find it limited. In the worst of the liquidity time, mid and small cap trades can go at a discount to large. So they still have a way to go. We continue to maintain our view that the money is to be made in large cap on a 1 to 3 year or longer perspective. And this abeyance in the market is an opportunity to invest money in the market. Large caps. The safety large caps with earnings give you a growth similar to a flexi cap. The crux comes back to the earnings. In mid and small caps, the valuation had run up ahead of earnings and in some cases without earnings. So the reset was overdue, and it happens in a carnage manner, and that is what is happening. What should investors do? Your long-term money, your long-term flows should continue the way it is. I don't see a fundamental reason for that to change. This place is not for short-term money. This place is not for quick money. And those think it's easy money or those who thought it is easy money, it's a period of reckoning. Realize it, be patient, and the market will fill your bank account and wealth and help you achieve all the goals except one goal, which is quick. Be it trading, be it investing, process and time is the biggest creator of the wealth. Coming back to, to what happened in the results this week, our result season came to an end. The quarter Q3 was a mixed quarter. Broadly, the trend continued that the revenue growth was decent, the margins were a miss, FX drove the profitability down for most of the companies, but broadly the demand environment looks better than Q2 and going into Q4, most of the management sounded confident. This means that from an earnings perspective, next 3 months should give you good news. There is no major political event or global event. In fact, on global front, the meeting of Mr. Modi in US with Mr. Trump and likewise seems to be giving us a decent data point and vibes. The global markets found their footing, the macro data looks fine, though gold still continues to be strong. What it highlights is that there is no reason to panic when it comes to India other than the demand supply. Hence, as a long term investor, one should tide it, one should stay invested. New money first should be parked in large caps even at this point of time because there the margin of safety is high and when the market bounces, the first set of bounce will come in large caps. And the most important point is if the global macro improves and with the kind of fall it is, India will become cheap again for FIs to come and they will come back in lock and balance. And they invest only in large cap. It means the first bounce will come in large cap. Our portfolio stocks remain the same. We haven't changed the portfolio much, though we are looking at new opportunities within the large cap space because this carnage has led to some corrections in large cap, which is natural as people scout for exit to fund their losses, and that's where the opportunity lies. It's been over 15 minutes. That's the time I assign myself to speak to you on this. I will now pause for some questions, if any. Happy to take it on. You can drop a message in the chat here, drop a message to me on WhatsApp. Happy to answer it here. We'll wait for 60 minutes, 60 seconds. Given no questions here on the chat, I will end the stream. Thank you for being there to listen to me. I'm always around for your queries. See you guys around. Thank you for watching us on Beyond Bulls and Beyond this week. See you again next week, discovering what happened in the market. Thank you.